it mean for bond markets too in the long run? For a better perspective, Yvonne Chan spoke to Vincent Fernando of Regalia Capital Markets, and she asked him if he saw the recent turbulent times in the markets drawing to a close.
No, I think there's more turbulence ahead. The challenge is that we still haven't seen tapering actually happen. Thus far, markets have just been moving on the notion that it might happen. So we have that. Also, currencies remain volatile. And even though a lot of foreign money has left the region, vast amounts actually came into the region since the global financial crisis. So there's still a lot of money here. So unfortunately, I think, there's definitely more turbulence to come.
So with all this turbulence then, what headwinds do you foresee for Singapore's bond markets in particular?
Yeah, I think for bond markets, luckily, Singapore is actually one of the more defensive parts of the region. It is a safe haven within this region. So I think for bonds, let's say, of the government variety or linked to some of the large government-related companies, I think those should be defensive. But where you really need to be careful is in the riskier spectrum of the asset class. And that's where there's been a lot of chase for high yield, especially since the global financial crisis due to low interest rates globally. People have been chasing yield in the region. Those are the kind of assets where I think there's a lot of risk, because now that better yields or higher yields might be offered back in the U.S. and other places, also liquidity might be coming in a bit. A lot of money could come out of those sort of chase for yield assets.
Now, aside from bonds, how do you think Singapore equities are likely to perform in the near term?
Yeah, equities have a similar sort of dichotomy. Basically, I think the equities where they benefited from low interest rates and a chase for yield. So things like REITs basically people are chasing yield because they couldn't get good yields elsewhere. Those are at risk because again interest rates are going up. Also property, because property benefits from lower interest rates. Or some stocks that maybe, again, people buy them for their yield. Those are all at risk. But if you, I think, focus on some of Singapore domestic plays, those are interesting. Also, in the large cap space, I think the banks are interesting because they actually will benefit from rising interest rates.
Now, coming back to the bond markets, Singapore's position as a regional bond trading center has led to its selection as the first foreign branch in the Swiss National Bank.
Yeah.
And this is the first time it's done so in over 100 years. So what sort of factors could we attribute for this?
Yeah, well, look, I mean, if you in the region, Singapore is probably the best place you could put any sort of regional operations, particularly with financial markets. Probably the best thing that happened to Singapore was Hong Kong going back into China, because Singapore now has that very sort of independent, people view it as a very independent, neutral place. They value the government policies towards the business, opening businesses. The financial market regulation is very well trusted. Also, the financial market's very open. So Singapore is really the natural, location for any sort of financial trading hub. And I think increasingly we'll see Singapore's relevance relative to Hong Kong, increasing.
Talking about accolades, Singapore has recently taken over Japan as Asia's largest forex center and has also come in third globally after London and New York. Now, is this move to prominence due to the emergence of Asian currencies, particularly the Sing dollar? Yeah,
no, certainly. I mean, as Asia becomes a bigger part of the global economy, its currencies and the trading of those currencies becomes more significant. And in a similar way that Singapore is becoming a hub for bonds, again within Asia, Singapore is a natural place to have to be an FX hub. So I think you're right. What we're seeing is a result of Asia becoming a bigger part of the world economy.
And that was Vincent Fernando from Regalia Capital Markets. In property news, about 60% of